Hello everyone. It's Elena Bartash, your real estate investor. Today, my podcast is within my series, Private Money World. Uh, and my guest is cool, interesting guy, Mike Palmer. Mike has more than 30 years experience in real estate. He lives in North Carolina and he has such a great and long lasting experience with different type of lenders. So we both are members of real estate community sub 2. And the purpose of this podcast, I would like Mike to share with you guys his journey and his experience. And yeah, I believe it will be interesting. Hi, Mike.
Hi, Elena. How are
Welcome
you?
online. I'm
Okay.
awesome. How are you? How is your day?
Good. You hear me okay? Everything good?
Yes, perfect. I hear you perfectly. Yeah. So how was
Okay.
your day?
Oh, day was pretty good. We got some deals further along and spoke to some new prospects for some new builds. So, um,
Awesome.
and some land
Awesome.
that I
Yeah,
passed on might be coming back to me because it seemed like the builder went out of business. So they've got a bunch of half-built
perfect.
houses and somebody to take over. So
Perfect.
that might be promising.
Perfect. I just told people, so you have such a unique experience in real estate, more than 30 years, and
Hmm.
you obviously can tell us how was situation with lenders, how did you build relationship 30 years ago, and what strategies do you use building relationship with lenders right now? What kind of lenders do you use? So I will ask you a couple questions. And in the beginning,
Okay.
if you don't mind, please tell people a little bit about yourself to let them know who you are.
Goodness gracious. Well, I get my first carpenter job when I was 17. And then I went to college
Mm,
and had some other jobs, but construction always kind of that was what I really stood out at. That's where I was good at assembling things. So had a couple of small contracting businesses. I sold real estate for a while, thinking I could get into flipping and doing what we do in sub two, flipping rentals, all that, which was ended up working so hard to earn a living. I didn't have any time for that, but I did learn a lot as a realtor. Although that was interesting. I
mhm.
won awards. I won Rookie of the Year. I won $1 Million Club, but I still couldn't pay my bills. So something had to give. So then I took the first job, which I had was building sheds, which later turned into garages, decks, and we started building houses. Now I've been building houses for this time for like 25 years, but I've worked on many other construction jobs building along the way. So anyway, and I've got a slew of rental properties now. And, so we've just been building the whole time. So
Great.
that's it in a nutshell.
Yeah, great. You just
But
mentioned your
we've got
first experience in real estate was you were building sheds.
yes. Um, Sold real estate for 3 years and went through about all the money I had. So I was kind of in dire straits financially. I'm like, okay, do I look at losing my house and my car, hanging my head in shame in bankruptcy, or do I just put my head down and work with whatever? So I did everything. I built shed. There was a shed building company. I
Mm,
said, whoever puts me to work first gets me. So I was building backyard sheds and barns, working at night, serving banquets and doing restaurant work or
oh,
whatever, side work, whatever somebody wanted to pay me. So eventually, then I met my wife, and eventually, after a few years, worked my way out of the hole, um, building. And then the company we were subbing for put us in charge of the garages. And then we realized, okay, why do we need to work for someone else? So we got our own Yellow Page ad back when people actually used Yellow Pages and there was no internet.
mhm,
And the garages got so elaborate, we said, why don't we build the whole house? So we built a
mhm.
couple of spec houses and did not make any money. Because the first time you do anything, you generally suck at
Yeah,
it. Um, we were good carpenters, we're good contractors,
great.
but building was a
Yeah.
different skill. You have to manage the money, you have to choose the appropriate things, you have to know about appraisals and
Mhm.
underwriting and real estate markets and listings and all that. So we got an education there. So I said to my partner, who we're not partners anymore, but now he's kind of got a very successful business of his own. Um, he's still a good friend, but I said, all right, we're gonna just go away defeated, or are we going to learn from this experience and turn it into something? Because
Mhm.
I didn't want to go through all that blood, sweat, and tears for nothing. But I mean, man, in the first house, when we dug the footings, we painted it, we roofed it, we framed it, we sided it, we did all, we assembled the cabinets. I think we made $7,000 a piece, which, we would have been better off at McDonald's by a long
Mm,
shot. So,
yeah.
we learned we were over improving the house. We were putting too many good things in there and not selling it for enough and really not paying attention to the market and doing exactly what the realtor told us, which sometimes is good, sometimes is bad. They're not all created equal. Some want a quick commission and some are really out there for your best interest. So it's something you just have to go through and develop. But I mean, as far as creative money, do you want me to keep going? Did you have another question?
Yes, of course. Yes.
Okay.
Yeah. I will
But
ask my questions later.
your show is about creative money. So,
Yeah.
our very first transaction, I built myself a house. Okay. We built it. We went to the bank, got a traditional loan. I had some savings at that point. So we used our own savings to buy the land. We bought it cash. Built that one and I moved into it. The next house, we didn't have any money. So, I mean, most of my savings was in my house. We had a little bit, but you need some working capital. So my friend's dad says, well, why don't I got a ton of equity in my house. Why don't I just take a home equity line? You guys can pay me the interest. I'll get the tax deduction. And so he bought this lot for $20,000. This was, when you could get lots around here for $20,000. So we did that. We built the house and we piled up a little bit, but not much. I mean, we got about $14,000 profit, but we kept that because we kept working, building decks and building screen porches and doing whatever people wanted us to do. Then we built another house and we made a little bit there, not enough to justify our existence, but we still came out with some profits we didn't spend. But then, my partner's life took a different turn. He had, he wanted, we decided to go different directions. So I went out on my own and I built the bank would only loan me money for one house. I had enough capital to buy a lot, build one house. Okay. But I wanted to build more. So I was looking for lots and I called one. I found a sign in the woods, all faded out. And I tried to make out the numbers. I called it and it was attorney's office. I said, I'm calling about the lot for sale. He goes, oh, you got to call my realtor. So I called the realtor. Turned out I had dialed the wrong number off that sign. But the guy had a lot for sale and the realtor said, okay, you can buy this lot and I'll subordinate it to you, but you have to use me as your realtor. I'm like, what's subordinate mean? It means you go get a bank loan, right, to build the house and you don't have to pay me for the land until you sell the house. You can pay me afterwards.
Oh,
like, okay. There's money. That's kind of creative finance, right?
Yep.
But the realtor
So
said, here's the catch.
it was your first experience with creative lending.
Kind of. I had
Okay.
before I became a builder, when I was just building sheds up in New Jersey, I sold my house to a guy. I let him. I did a wraparound mortgage. I let him make me payments. He gave me some money down, and he made me payments because he couldn't qualify for a mortgage, but he's a good credit-worthy guy. So I did a wraparound.
So
I got
you are
cash
you are creative guy. You are creative guy long time ago, right? So you particularly started your journey
well,
with some creative finance.
Yeah, I read all the books and everything. So finally, he cashed out because the property had gone up in value, and he couldn't get a conventional loan. So I charged him a little higher interest rate than mine, but it was still he was still happy and thankful. He was just happy to get a house because nobody would even talk to him. So then a few years later, and we had our first child, he got a new loan. He refinanced, cashed me out, but we had a chunk of cash so we could spend more time at home. We kind of lived off that for a few months so we could, both be at home with the baby, which that was nice. I mean, I did some work, but we had, it gave us a nice cushion. So, and my family was like, well, you're taking such a chance and you're kind of at that person's mercy. I'm like, no, they're at my mercy because if they don't pay, they're homeless, which obviously we don't want to happen. I mean, it was a great family. I'm really glad it worked out for them. And we got paid. But anyway, where was I? Oh, so they subordinated the lot to me. So I had to use that realtor as my real estate agent, but that's fine. So I got to build a house, sold that one. But there's another lot on that street, but you have to see some capital. You need some cushion to build with, to buy your materials.
Yep.
Right. So I approached my wife's cousin was a builder. And he had told me, yeah, I've got lots of capacity to borrow because he'd been building around for, he had a good 15 years experience in the Navy. He knew all the bankers and everything. I said, all right, tell you what, I've got this lot over here, right? Overlooking the water, beautiful, beautiful lot. I think we'll have no trouble with it. Here's a house a nice house plan
Mm-hmm.
that sells all the time with a bonus room and all that. So I said, how about if you finance it, you get the construction loan, I'll build
Mm.
it, and I'll give you half the money, and you don't have to do anything. And he said, okay, that looks good. So he did it. He had about 6 hours in it. He got half the money, which was about 20 grand, which is probably, about 50 or 60 grand today. He had a few hours in it.
Oh.
All he did, he sponsored me. He signed his name on the loan.
Mm-hmm.
Now he was responsible if I screwed it up. He came out to check a couple of times. But number one, he's my wife's first cousin, so we knew each other. And I
Mm-hmm.
had done work for him because he was a general contractor, and we started out, we were swinging a hammer. So he had hired us for a number of things. So we were we would have, he knew my work, and he knew, we had people we knew in common. So he knew I wasn't going to run off with his money.
Yeah, but
So we did that.
it was still experience working with hard money, with traditional loan, right? With a
Yes.
bank.
Yes. So
Okay, so
he,
next you will tell us your journey when you will jump in more into private money or combination private money and hard money. Yeah, how did you get these ideas? Yep.
well, um, that's kind of a long-winded answer for that. Um, when I first started buying rental property, we did it with the bank because usually with a bank you get a better rate. Okay. Now they
Mm-hmm.
do want to see, they want to know all about your financials. They want to know how you like your eggs, what are your favorite sandwich condiments, and basically a full colonoscopy. I mean, they have a lot of requirements, and I'm not knocking banks. They're under regulation. They have to ask all these
Yeah.
things. And they say, oh no, you're building a house or building two houses. We're not letting you build anymore. Even though
Why?
they said we're not loaning you any more
Mm.
money because we're not comfortable with how much you're lending. And it was like, yeah, but I need to do more than two houses, especially if I have employees. So there are
Mm-hmm.
limitations with the banks.
Mm.
So first two rental properties I bought, I went in with a partner who had got a hard money loan, but they had done a bunch of work. So I refinanced out their hard money loan for stake and equity.
Mm-hmm.
And he ended up never paying anything and skipped. So I had to take everything. It's like, these are mine. Um, he turned out to be a bad partner. You have to kiss some frogs in that. But anyway,
Yep. Yeah,
but from
you're
then,
right.
like I had bought some out of lines of credit or some just cash, just because by the time I built up lines of credit at the bank. So if it's a distressed property, buy it there. Oh, and also what we did after 2008, like 12, 13, 14, 15, there were a lot of distressed properties. Like a lot of times we went to
Mm.
the less expensive properties, like double wides and trailers and modulars. But you could get them for 30 and 40 grand. Now they needed help, but we knew how to fix everything, right? They were, people got foreclosed on. What was the bank going to do with them?
Yep.
So what we would do sometimes is take people around to those properties, right? And say, we'll buy the property. We'll fix it up for you, but your credit is not good enough to qualify. So you're going to
Mm-hmm.
have to live in it as is and pay us rent. It'll be a low, fairly low rent until once you qualify for a mortgage, we will make it meet appraisal. Then we'll give you your new floors and all that. But we didn't want to do that if they're going to move in for 2 months and move out.
Mm.
Right. So we did a lot of successful transactions that way, where, um, so they would go qualify for the mortgage. Once they got the mortgage, then we would, between them, once we got a mortgage commitment, we would, put in the new floors and the new cabinets and fix it up. And
Mm-hmm.
then they would, um, and once it passed appraisal, so that, I guess that was creative finance because we were putting very little of our own money in. We were using the renter's potential borrowing, but that was very
Yep.
cumbersome because you had to find the right person that really wanted that. Now it wasn't nice for low cost. They could get like an acre or two of land, 2,000 square foot, house, usually had a barn or a shed back there, for very low cost. So that made, people happy, that couldn't afford a house otherwise. And we helped them with their credit,
Yeah,
but
and
their credit had to be
actually,
close.
Mike, sorry to interrupt you. Actually, it's a great example how you were creative with financing with business. Yeah, because yeah, rent to own or seller finance, how you sold these houses to people, probably with balloons. Yeah. It's
Well, it was basically rent to own, but once you're qualified to own, we would help you with that because
mm-hmm.
it's like if your credit needed to be here to qualify for the FHA loan, but your credit was
Yeah.
here, okay,
Yeah.
well, we would coach you on that credit repair. You had to get a secured credit card. You need to pay that off. And once you can do that and your credit gets up there, then you can qualify. And then
Absolutely.
you can get
You not just provide people shelter for people who not qualify for traditional mortgage. Also, you help them to restore their credit score to be able to be
yes.
qualified for the mortgage. Yeah. So great
Yeah.
ideas
So
and
we
a
were
great model.
basically putting them in based on their borrowing power, their future borrowing power they would
Mm-hmm.
have once they did certain things. So yeah, we were able to
Mm-hmm.
make people happy that way and make ourselves, enough profit to make it worthwhile.
Yep.
Um, I had sold people some stuff on contract for deed where they made payments. Um, but when, it's still to this day, like I had a creative finance company and they were, they gave me a higher loan to value and they gave me easier terms, but they were 3 points
Mm-hmm.
higher than the bank and their closing costs were much higher. So which is better, the creative or not? But I'm involved in a flip right now, right? I think we got this thing for 725. The comps are like 1,000,001, 1,000,002. So we're going to put, I don't know, 70 or 80 into it. All right. But I went to a hard money lender. So they're going to loan us the $80,000 for the fix up,
Mm-hmm.
90% of the down payment. Okay. So it's a hard money lender. They had to look at my credit. They wanted over a 740. All right. And they wanted experience. They wanted to see that I'd done these transactions. Now they would give it to me, but they would have given me less money, you know.
Yeah.
So I had to show them experience, and I also um, have to have some down payment money. But I can borrow that down payment money off a line of credit that I have.
Mm-hmm.
So I can basically do this thing without taking money out of my pocket.
Yep.
Do that, and but a wholesaler brought it to us, and a partner invited me in, so I'm providing the money, and we're going to split up the profits at the end. But that should be a nice flip there. But
So until this moment, you still been working only with hard money, right?
yes, on this
Didn't
on
get
this property,
any.
we're set to
Yeah.
close. Yeah, all
And
hard money
yeah.
without any bank loan. Um, yeah, that's all hard money. But the hard money, you pay a higher rate. So it
Mm-hmm.
depends on the transaction. This is a non-traditional transaction with a fix and flip, and banks don't really like that so much. When I build new construction and I've got a track record with them, they're like, "Yes, we'll let you do that, Mike, but we're not letting you do
Mm-hmm.
more than two or three."
Mm-hmm.
So
Yep.
they do limit you. Um, but I mean, at the bottom line, but I mean, you have to show them, you have to have years of track record and all that. So when I didn't
Yeah.
have that, I went to hard money or non-traditional lenders. I brought in partners. Um, I've done that other times too, where they said, "Okay, you put up the money for the lot, we'll build it, and we'll split up the profits."
Mm-hmm.
But every time I do that, the first time I did it, they're like, "Awesome, Mike, you did me right. Let's do another one." And I'm like, "Okay, I do all the work. Let me see if I can get better at borrowing the money from the bank, rather than giving away half my profits." It kind of, I asked him for the deal. I mean, I'm very grateful that he did it, and I was able to make some money. But it kind of sucked the life out of me in a way, you know.
Yep.
So you want to use hard and creative terms to get your business up. But once you can get the cheaper money, sometimes it makes more sense to do that than to give away half your profits. And then once I did that, I started to build up more money. Then I would buy land and inventory. And but the bank wanted me to own the land free and clear. If they're going to loan the money, they wanted you to have
Yep.
some collateral in the game. But if you didn't, when I didn't have the skin to put the skin in the game, I used someone else's skin, basically, or
Oh,
someone
yeah.
else's borrowing
So
power.
you were involved some sponsor, right? Consigners
Yes,
for your loans.
uh,
Yeah.
yeah. Or actually, they just signed for it. So if I messed it up, it's their house. They could fire me.
Mm-hmm.
Um,
Okay.
and that's what in sub two they call loan to own.
Yeah.
Times if you're sponsoring people, you're that say, okay, I'll sponsor you, but I'm going to put the whole thing in my name, and you're going to have a
Yeah.
contract to take it over once you are successful. And if you're not successful, then I have to take it over, and you're out.
Hmm. Yeah.
Um, but sometimes the
Yeah.
banks will want you to own, so you can just have a contract with the person that did own it. You take ownership, and you give it to them. Um, Goodness gracious. Other things too. I've had buyers come to me, they're qualified for a VA loan, right? They have a piece of land.
Hmm.
They want to get a VA loan to buy the house, and which is a good deal for the for the person that was in the military. It's the VA loan's a good deal for them. But they're like, Mike, they don't have a construction mechanism. There's no mechanism in the VA. I think there is now, but there wasn't at the time. So can you get the construction loan? And it's like, yes, but the bank's not going to give me a construction loan to build on your lot. So what you have to do is sign the land over to me. I will take ownership of the land. And of course, they'll have a lien to protect them if I get run over by a bus or don't perform or
Hmm.
whatever. Um, I will get the construction loan from the bank, build the house, and then you can take it back over with a VA loan afterwards, which is I guess another version of creative finance.
Very creative.
Yeah. But now, now that I'm doing more fix and flip and I'm looking at a portfolio now too. We might be able to do what's called a Morby method, where
Hmm.
we borrow more money. We borrow more money than is needed, and we give that to the wholesaler, and the wholesaler in the second transaction can return it back to us. I got to make sure
Hmm.
all the mechanics of that work, but I think we're going to be able to do that where we can use creative finance and basically get into a portfolio of properties without any money out of pocket. But that
Okay.
property has to have high
And
cash flow.
who do you use right now? Do you use right now hard money or private money or funds?
I use both. I'm doing more
Okay.
and more private money, or
Okay.
creative fix
Tell
and
us,
flip.
give us please couple examples. How did you start working with private money? What kind of experience did you get from them? So what was the difference? For example, you have huge experience, more than 30 years. It's crazy. So what was the model of working with private lenders, let's say 20 years ago and now? What dynamic do you see? What are the difference?
Well, it seems like I could be wrong on this, but my perception is 20 years ago you were going more to individuals.
Mm,
Now with the internet and YouTube and everything, there are all sorts of companies, legit companies that um, that's all they do is hard money and lending. So it's more, you can find more, uh, and there's a lot of companies that you'll find a lender and they'll white label it. They'll just put their own logo on it, and you're still working with the same company. They just market it. It's kind of like an affiliate program. So, uh, what my perception is, just with the advent of the internet and all this online
mm,
proliferation, that private money lending is so much more available to everybody right now.
yep.
But
Yeah.
the thing is,
Where do you find them? How do you build these connections, this relationship?
oh well, heck, I went to a seminar called Limitless, or an expo with a bunch of real estate investors, and it was Robert Kiyosaki and Ken McElroy and all the big boys, of course, Pace Morby and all them. And there was
Mhm,
a company I talked to called Fixated Funding, which is a subsidiary of what Tal Yarborough does, and I think he's affiliated with the company somehow, but I think they're white labeling it for another bigger lender. I'm not exactly sure, but I talked to the guy. I really liked his program. I mean, the points were reasonable and
mhm,
everything was more reasonable than some of the hard money lenders. And I spoke to them other ones, and they were 3 points higher on the interest, and they had higher fees
mm,
in. But I have years of experience and um, a very high credit score. Not everybody has that.
mhm.
And when I was younger, I didn't have that, so I was giving away half or big chunks of my profit. I remember the
But
first
do you
fix.
need it really right now? I believe you don't need it right now. You have such experience. You don't need this freaking credit score. Nobody
Well,
cares.
but the thing is, they make it simpler, so it's a little bit higher interest. But if you're
Okay.
only looking for a 3 or 4 month hold, why go to the bank and do all that? And when I go to the bank, they attach my personal credit and my house and everything. Usually, the hard money lender Okay.
Hmm.
If things go awry or you fail or in some reason something happens, they take the property, and that's usually the end of it.
Yep. Yep.
Um, the banks, you got to sign personal guarantees. I have to have my wife come in and sign. Um, the very first spec house we built was me and my partner and our wives, and we all had to come in and sign on this loan um, at the bank because they wanted everybody's business. Now, with hard money, and you have to pay upfront. You have to pay some fees upfront. Um,
Hmm.
so there's pros and cons to both sides. But if it's a shorter hold, private money and private money does not hurt your ratios for borrowing somewhere else.
Hmm.
Because I've got a company, we build new homes. It's Mike Palmer Homes, and we have a YouTube channel if anybody wants to go there and hit a like or subscribe. I'm throwing a cheap plug here, but we build a lot of houses there. Well, we need our borrowing power, right? So if I start
Yep.
going to conventional banks for all these other side projects, then they'll say, well, you have too much debt. We're not going to loan to you. But with private money, that's they're only secured by the property. They're not secured by my business and everything else. So that's when you get into more properties, if you're beginners out there, when you get to own more assets, you have to start doing more LLCs and different liability protection. Because if somebody sues you in
Yeah.
one entity, you don't want it to attach everything else. And you
Yeah.
do
Yeah.
it
Yeah.
long
So
enough, sooner or
you
later, a
suggest to
lawsuit.
people create LLC for every single property?
I don't create them
Yep.
for every single property, but I have a lot of LLCs. Um, so sometimes I'll put multiple in there, but usually try to put like kind and other. And sometimes I'm doing something with a partner. So um, that LLC is um, only contains
Hmm.
assets that we're doing together. No, I don't want to commingle
Yeah.
that with anything else or something I'm doing with
Yeah.
another partner. There's one there's one business that we bought, so I'm part owner in that. That's in its own LLC because that one's got some um, assisted living quarters in there, or it's independent living but assisted living.
Hmm.
Um, if something were to happen there, it's not fair to have something go wrong with my other partners. And when your umbrella gets big enough, sooner or later somebody will sue you because that's what we do in America.
Yeah. Right.
So
Right. Yeah. And what is your experience, for example, if you buy something together with partners? Do you prefer to build, as you said, LLC or just JV?
um, it's all based on the circumstance. One, we bought a
Hmm.
company, so we bought the LLC. We bought shares in it and all the assets in there. If I had to do over again, I would have just bought the assets and started a new LLC. So in case um, I don't know how that was a potentially bad mistake. It hasn't hurt us, but if somebody came and had a claim against that LLC from the previous owner,
Hmm.
that could have been bad for us. Um,
Yeah.
although the odds are pretty slim, but you learn something on every deal because nobody knows it all. But I'm sorry. Back to the original question.
Yeah. So
I can't.
about LLC or JV agreement, you said it depends, right?
Well, it depends. Are we going to hold the property? Um, like I have one LLC that it owns rental, but we're going to buy the property and flip it. So I didn't want to start a whole nother LLC
Hmm.
just for that transaction
Hmm.
because I'm buying it with an LLC and in partnership with my partner buying in an LLC. So we already have most of the liability accounted for there. So and we're not going to hold it real long. Um,
Yeah.
if we're going to do rentals now some of it, but now that I've spent a lot of years becoming creditworthy and able to borrow, well, I have some young
Hmm.
partners. They're just starting out, so they don't have all these assets built up, and they're 30 years behind me in the game. So they're like, hey, if you sign for the loan, I'll do all the work
Hmm.
and we'll split up the profits. And I'm like, okay, that's flip-flopped. I was in that position. you know I was in
Hmm.
a position 30 years ago. So I like that too. I like working with partners that way because I
Yeah.
provide something that they don't have. I provide the fuel that does this whole thing. And I really don't have to put much time and effort into it. So
Yeah.
everybody's happy.
Yeah, cool. And you mentioned you meet your lenders, your private lenders somewhere on offline usually, right? Events, conference.
That's where I've
Yep.
met. That's where I've built relationships. Um,
Mm-hmm.
but I mean, a lot of the partner. Well, I have somebody to loan it to me, and then we look at it, and it's like, we take the best deal. But I'm not dealing. These are still companies, and they charge me points. If I
Mm,
did not have, as long as I have access to that money, I'm not going to go to relatives, friends, just
mm-hmm.
private individuals, because if I had to do that, yes. Um, but I did go. Well, I did go to my wife's cousin, somebody in the family, but he was a builder. He knew the game. He knew the score. Um,
Yeah.
but if I can get a private lender for the same thing, why risk a relationship with a family or a friend? But I
Yeah.
have.
I mhm.
But I did have a friend. And he's friend and business partner. He's still a friend. We did a house together, and I did
Yeah.
some with my brother. Oh, that's right. Um, my brother had bought a house up in Boston. He bought two of them up in Cambridge, and he got them somehow. He bumped into them for about half of what they were selling for. So
Mm,
he bought them. He sold one, but he did have a line of credit. And I was building three houses on the street, and I couldn't get any more money. I said, "Do you want to do this one with me, and we'll split the profit? I'll pay." So he just took the money off a line of credit. I paid all the interest. When the house sold, I paid him back. And we had a problem. We had a bad framer. We had, a bunch of
mm,
issues, and the profit was very skinny. I said, tell you what, how's this? Since this thing didn't go right, why don't I give you all the money? I'll just give you all the money and just buy me a laptop. I'll get one of the new laptops were just coming. Get one of those new cool laptops. I can run my QuickBooks, and that's fine with me. That way my conscience is filled. But that's or we can split, do whatever. I'll do whatever you want me to do. But this went bad. And he's like, I still made a profit for doing nothing. We did nothing for the money, so I'll split it with you. I was kind of disappointed because I felt like he should have got a better profit off it. But he did get interested in it. So he quit his job, moved down here, started doing the same thing.
mm.
So it spurred him on to a new career. And then he since started a real estate company. So he kind of got out of the building aspect of it because his real estate company. Um,
Mhm.
but, he's bought a bunch of rental properties and all that. But he has done, I think, about zero creative financing. I'm the more creative finance one.
Mm.
But he
Yeah.
was able to
Mike,
do it.
do you have experience working with people who never done lending? I mean, individuals who never done lending, but at the end of the days, they became to be your lenders. Did you have such experience? And how do you build relationship with these people? How did you explain them what is private lending, what is investment in real estate looks like?
Goodness. I'm trying to remember. It's going back with, how many lenders I've dealt with. Um, every time I say I haven't done that, then I remember a case. Okay, yeah, I did do that years ago. But
Mhm.
basically, my personal constitution, I kind of show them the money on that. It's like, here's a bet, but I kind of put it out there, and I don't really try to push them and encourage them. I just
Mhm.
push it out there because somebody has to really want to do, somebody has to want to do this. But
Yeah.
typically, you talk to people that, they're just putting money in CDs. I had a friend the other day. She said, "I've got 100 grand, but I put it in CDs. And I get this 5%, and I got to pay taxes on it. So I'm getting 2 or 3%. I want to put in some of the stuff you're putting in." And I'm like, "Well, okay, but I'll share with you what I know, but you're not putting it with me because, you know, we're at each other's houses every Christmas, and our kids are friends, and I don't want to, you know."
I
Um,
see. Yeah.
yeah, but it's
What if something goes wrong direction? What if something doesn't go smooth? I mean, between you and your lender, how if
uh,
business, for example, you see you lose something, if something goes not by your plan, what do you do in this situation?
I just pay the lender what they're owed, and I take the lumps on the chin. Now, I was fortunate in that the time I started, because up to 2008, when the downturn happened,
Mhm. Yeah.
lots of friends of mine watched them go bankrupt.
Oh
And then
yeah.
some of these were good people, but nobody paid them. If nobody pays you, you can't pay all the people that work for you. If
Hmm.
that had happened, my partner and I talked about that. I call him my partner, my ex partner, but I still refer to him as my partner because we talk all the time. But if that happened to us when we were younger, getting started, it would have been a rug pull. We might have ended up with a bankruptcy. There's always that risk with it, the way they handle finances and money. But we were in a good,
Yeah.
strong market, and I didn't come out of the downturn unscathed, but I stuck with bread and butter kind of houses. I didn't get into the fancy McMansions, because they're the first ones to get hit. Some of these houses that were $1 million came down to 500,000. Well,
Yeah.
if you're doing that on leverage money, you're doing that on borrowed money, where's that money going to come from? So a lot of these houses went back to the bank, in which we we bought up a lot of cheap properties after they went through the bank. So that's kind of the way to do that because there's a cycle to it.
Hmm.
So in a down market, that's when you do land banking, and that's when you buy these things. But if that would have happened, if we'd have timed it wrong, that could have been a big setback. We'd have had to start our careers all over again. Which fortunately that did not happen. But if something goes wrong with the lender, I have got, enough financial resources to where the lender's got to get paid. If you can't pay your lender, then I guess you approach them and tell them the situation and do what
Hmm.
you can to mitigate it. But, if,
Yeah. To
if
protect
things
your
went,
lender
things
and
went
to
wrong.
save relationship, right?
This was decades ago, went wrong with my brother, but I offered him, we made something. It wasn't projected. It wasn't what we should have made something. I offered him to just give all to him. You take it
Hmm.
all. Because the guy, we had some bad subs. They didn't frame right. I picked some bad ones. I had to pay a bunch of money to fix all their horrible work. And this was a people management issue, not a contractor issue. But that's where you go from tradesman to builder. It's a different skill. And the money management and all that. So that was when I paid a guy too early. He wasn't done his work. And then I found it was a horrible job. So I had to basically tear it all apart and redo it. And that cost a lot of money. And then the house sat there for a long time and didn't sell. So that was a setback. But I don't have a better answer than that. I pay the lender. I do whatever I have to do, make sure that lender's paid. And then I know they'll loan to me again.
Right. So that our goal is not just to make money but to save relationship, right? To save trust from the people who trust us, who believe in us,
Yeah, it's got to be
right?
fun,
It's
profitable, and help somebody. Those are the 3 rules.
oh, help somebody. Could you please tell us a little bit more about what is your philosophy about helping people in your business? What kind of help can you provide, maybe for community or whatever?
Oh goodness. Well, mission statement. My mission statement um, is to provide local jobs for local economy by building houses that are
Hmm.
exceptional to live in. Because I feel like capitalism has to work, and when I build a house and make a profit for myself, okay,
Hmm.
and it's I made a very nice living, raising my kids and everything through doing that, and then the investments have been pretty good as well. But all the trades, the electricians, plumbers, carpenters, they all make money, right?
Yeah.
And when I get them really busy, they make a lot of money. And I help a number of those that want to, when you do that, when you start to get in your late 30s, early 40s, your back and your knees and your body starts wearing out, which happened to me as well.
Hmm.
So I feel like I coach them. I've sponsored them. I've helped them get their license. Like, you have to do something different. And if you know housing, you can do what I do and not kill yourself. You can do as much physical or little as you want. So I try to coach those that are interested. I coach them doing that, but your body will quit on you. So I help the subcontractors that way. We help the customers because people they like living in our houses. I try to put, good features in there, like window seats and things that people really like, wood ceilings on their
Hmm.
porches, and try to pick and choose. You can't put everything in a house and still make a profit, but try to make it like a cut above for steal the ideas from the high end, ritzy houses and put some of those features into the lower houses. But, if people buy a house to live in, it's nice to have a house to live in. They're choosing to buy it. So you're helping them, you're helping the bankers.
Yeah.
You're helping your employees because, they seem to like working for me, because try to
Hmm.
make it a pleasant place to work. So that's how you help people.
Yeah.
Also, like helping other investors, like when you're buying a rental property, or you're helping someone buy, you're sponsoring. I had a family come to me. He made a lot of money from detailing cars and washing windows, commercial windows, but a lot of it was cash money, and he was also a 1099 employee, 1099, self-employed. So it was hard for him to qualify for a mortgage. And he's like, I sold my last house. I've got a lot of money, but I can't qualify for a mortgage. So I said, okay, if you put up all the money, I'll sign for the mortgage. So we bought him a house. He put the down payment, paid all the mortgage fees. I just signed on the paper, but I had to own the house. But he had a contract to own it. So he paid me like, I think $300 a month over his mortgage, which was a better deal. It was a brand new house he bought than he could get anywhere else. And I said, as soon as you qualify for a mortgage or you want to refinance, you can do that. So I just made money every month. Well, after the COVID rush, real estate values went up. He cashed out for a big pile of money. If I do over again, I might have said, I want a piece of the equity too. But it helped his family immensely. To this day, they still thank me for everything. And all I did was sign some papers.
Yeah.
That's all I did. And I got money for a couple of years too. I got some monthly income. And but that helped that young family. That was a real good feeling.
Yeah, of course, we all have to do something useful for people. Mike, thank you so much for all your golden nuggets. We probably have 2-3 about minutes left, and your experience is so amazing. And what would you suggest to people who are 30 years behind where you're right now? If they want to step into real estate, but they don't want how to raise money, where to find lenders, what they should start from?
I would join these communities. Especially. I don't know how I missed the sub 2 community, but I'm writing deal. I feel like I can get just about as many deals out of there as I want to. There's all sorts of opportunities, but get around people that are doing it. Do whatever you got to do to get in their company. And when you do have a deal, if you have this community of people, you can run it by or just ask somebody, hey, you've done a lot of these. You mind looking over this transaction I'm looking at? And I think that's the best way.
To be with people who do the same, right? Who do the same.
Yeah. Get around people more successful than yourself.
Okay. To leverage the experience and to do deals with them.
Pardon me?
I mean, to do business with them, to leverage their experience and to do business with them.
Yes, exactly. But you can't learn how to do this. I mean, you do. I've learned a lot from books and videos and all, but you have to have a group of people. I've built, a bunch of contractors and subcontractors, and you build a community of people. That's where it comes from. What's the title of that book that they always say? You can't teach a kid to ride a bike at a seminar.
Right. Only practicing gives you real knowledge, right? Real experience.
Yes.
Yeah. Okay. Thank you so much, Mike, for all your time. It was very cool, very fun, interesting to listen about your experience. I hope for people who watch us right now, who will be watching us in the future, because this podcast will stay on my YouTube channel. I believe it will be very helpful and very useful and very inspirational.
Okay.
Thank you so much, Mike. Thank you so much for your time. Have a good evening. Bye-bye. People, I believe it was interesting for you to get something from Mike. Yet it's interesting guy with more than 30 years experience in real estate, and he has experience with everything. He still does projects and multifamily, and he builds, and he has connections. So I will put his link to his Facebook under this video. You can reach out to Mike directly. And if you are a private money lender, please reach out to me because I buy creative deals nationwide. My exit strategy is spot split co-living model, so we can cooperate together. I can introduce you my team. You can see what we do, and let's build a relationship. Thank you so much, people. Have a wonderful day. Bye-bye.